us. The other guys, let me see. We have, I think I can name drop. Olaide. Okay, this is my family here. Dubem, Mwimwa, Nathaniel, Wally. All right, guys. How's it going? How was your weekend? We're not going to take too much time here, even though there's a lot to talk about, but I think we can flesh it out over the week. I just want to put pointers to a few things and kind of like the state of the market right now and how we can go alongside it. We have gotten into a month that is known as Black Swan, right? For years and years now, 30, 20, 10 years ago, this has been, the idea that August is that month. But in recent years, the summertime has really changed, right? It's no longer specifically August, right? It's I'm sure you started to already hear about summer getting into the end of June, July. Some of you have even traveled, in this time period. So it's not as concentrated as it used to be, right? Nevertheless, right, we would still take caution. We would still play with some type of reserve, and the reserve would still be the same things that we do. We have trained ourselves over the years to be able to play this game with risking what you can afford, regardless of what conditions they are, right? Over leveraging would never bring you to the consistency that you find. So, regardless of the conditions, if you play, within your means, which would be anywhere within 5%, then you are good, right? You survive regardless because everything is on edge, right? In fact, in periods like this, periods where you can catch a good runner, right? And do well with it. So that's what I want you to think about. It's a new month, and like I've been talking about for a few weeks now, demand results for yourself in the next 4 months, 120 days. You would have to ask your question. You would have to ask yourself the question of what did I do with my trading this year? Where am I? Right? And for some of you, it's not going to be, all of the 1 million, $5 million, or even it might not even be 50, $100,000. It might just mean that you're out of the phase of making the mistakes that held you down, that consistently brought blown accounts. It might just mean passing a funded account. But again, what I demand of you is that you move, that you're not in the same place that you started the year with, struggling to keep to your rules or to your system, that you actually become better. That is what I ask of you, and I ask that you demand of yourself, that, right? So it's time to work, right? And that's what we're gonna do, work. My weekend was calm. I hope your weekend was good. I'm currently watching House of Dragon, so that took a bit of my weekend. I got to do a bit of work Saturday, and more of the work came in yesterday, up until like 5 a.m. this morning or 4 a.m. when I went to sleep. So and that was kind of like a bit, and I was asking myself different questions, coming into today. And those questions, some of them you'd see me and Zero Oluwa kind of like just get at it, right? There's something you need to pay attention to, right? There are some markets that, especially when you start to think about the macro or the fundamental side of things when it comes to price, there are some markets that you cannot take out of the picture, right? And the reason is those markets are bigger drivers to the overall market in whole, right? You want to understand that there is one market that all other markets need to transact in, the dollar. But as much as the dollar is the king of the market, right, in the sense that if all other markets need to do transactions globally, they need to change to the dollar, right? Which obviously just thinking about it means strength, means more money to a currency. That means bullish, right? So the dollar is the king in that sense, right? But the dollar also has dependencies, right? It's like There is nothing that you are going to point out to that doesn't rely on anything. It is contingent on something. This is the proof that there is a God because there can't be a creation without a creator. So even as the dollar assumes king, right, it still needs to rest on something. Even as we have the head working, the head still needs to rest on the neck, right? The neck might not mean so much, but also the head is useless without the neck. Do you get it? Right. And when we come down there, right, there are certain things, there are certain assets that the dollar is dependent on. The dollar is dependent on the treasuries, right? Because the treasuries is the primary source of share volume to the dollar, right? The treasuries just mean the bonds, right? For a country to assume power, they need to do things, right? And to do those things, right, the way they get the money to do those things is to issue what is called an IOU. An IOU is just, it's a paper just to simplify it that the government will give you while you give them money, right? And in that paper, it will state that this 100 million that you are giving them, they are going to give you 5% each year for 10 years, for 20 years, for 30 years. That's why you hear 30-year bond, 20-year bond, 5-year bond, 2-year bond, right? In the amount of that years, they are going to pay you an interest rate for that money. That interest rate is what is called bond yields, what we have been talking about, the one that we've been saying if the dollar is going higher or if the yields are going higher, the dollar will chase it, right? That if the yields are going higher, gold will go lower. That's that percentage, right, on the extra money, right, for your money to be in the government's hand that they pay you, that interest is what is called bond yield. So the bond itself, right, is how much you are paying, right, the money you are actually giving. Then they give you the paper, right? It's just a paper that you hold, and then they pay you that interest, right, through the year for the amount of years that you sign, right, that you decide to leave your money. It's the safest. It's called government bonds. It's the safest, right, and legal way to invest money, right, because it's with the government, so they have to pay you, right? So, like I say every time, the second problem you have after having money is what to do with the money, right? So over the years, right, this has been, the safest way to put money. So investors, big funds, hedge funds, right, they will take money and do it, and then put it, your banks, they will take money and then put it in the treasuries market. So the dollar itself is held together, right? The dollar itself is held. What the dollar really is of the treasury market. Do you understand? Right. So the understanding of the bond market, and because I don't have the bond market on my screen here because this just is inverse to the bond market. This is the bond yield. The bond yield again is the profit on the bond. So if the bonds are lower, right, the profits on the board go higher. Right. And I want to go in deep into this, but I don't want to make it so deep because when I start to talk about fundamentals, I can really just spiral. But what I want you to understand is the dollar, right, is held together by the bonds, right? And the bond yield actually reflects how the dollar moves. Because if the bond yield goes higher, right, it means that that profit that these guys would receive, the profit that you would receive on that bond, right, goes higher, right? Now, in that sense, investors would not like to take out the money or would not like to sell their bond, right? If you sell your bond, right, while interest rates is going higher, you'll be at a loss. So just how we just think about money, it's like if I'm in profits here and it's more likely to go higher. Now, obviously, you need to study some things like, oh, if inflation is still going higher, then this guy will still go higher. So why do I need to remove my money? Right. So all of that allows that the dollar remains strong since there is no taking out of money, right? A risk-off scenario is a bullish scenario. It means that instead of money being taken out of that assets or currencies, it means that money is being added or put into that currency, right? Or left inside of the currency, Right, so that's why this chart is important. Another chart that is very important is called USD I have it on my chart here because it's a very important chart. You ask me, how does USD apply to this? The first thing you want to know is I told you that the treasury market is the most important thing to the dollar. It's like the dollar is relaxing on the treasury market. But you know who is the highest lender to the US? The highest lender to the US is the Japanese yen. Is the yen family. The yen family have over $1 trillion, right, in loans to the US. And the story is really crazy. Sometimes when I think about it, it gets me deep into what is really going on here. And I'll kind of give you like a little bit of paint. So some of you might not like macro analysis. I love it. Been studying it for over a year now, hours and hours, and it's still sometimes very confusing, right? But I'll try and just paint the picture to you. So the way all of this works, or all of this has worked out, so let me try and just give you a framework. That you would have heard something about carry trade, right? And the carry trade has been, the oldest, one of the oldest forms of investing money, right? And the carry trade is from this pair called yen. So the Japanese yen has been known to keep their interest rates low. So think about this. The Japanese yen is offering 0.5% on their interest rates. Right. So when you borrow money from Japan, you only need to pay back 0.5%. Right. So what has happened? The carry trade idea is, and okay, let me now contrast it. In the same breath, if you are to borrow money from the US, you are to pay back 5%. Now, it's not just you borrowing money. If you also invest in Japan, you would get back 0.5% as profit. If you invest in the US, you get back 5% as profit. So you know what people would do? They would go and borrow from Japan, and then they would put it in the US market. When they put it, they'll use it to buy bonds. That treasuries I told you about. Treasuries is equals to bonds. They will use it to buy treasuries in the US market. And you know what they want to get? They want to get that 5%. So at the end of the year, they will just pay back Japan their 0.5, and they will be able to make 4.5% without investing any money. It's what is called carry trade. This has been going on for years. Big investors, hedge funds, this is how they've been making money for years. Right. The deeper part of this story is that Japan themselves have been investing or has been borrowing the US money. In fact, they are the highest borrower to the US. So, what now happens when Japan becomes the country that they borrow from? The problem with that is Japan's currency becomes weak against all other currencies, right? And a weak currency does something to the economy. It makes things expensive. Everything that comes into Japan becomes expensive. If you just go and check, houses in Japan, you would find something very not so cool. Japan is a fine country, but they have very small houses, very small spaces, low ceilings. Everything is kind of like just choked up together, even though it's a very, advanced economy. And even those small spaces, when you check how much they are, you'll be surprised. And like a very, very small space, like half of what would be a one bedroom in Lagos here, right? Or a small room, a studio apartment, maybe, if you divide that into three, would still be sold for $300-400 a month as rent in Japan. So everything becomes expensive when a country's currency becomes weak. And I've told you why the country's currency becomes weak. People would borrow from Japan, and then they will sell that yen. They will sell the yen that they get from, borrowing, and then they will sell it to buy dollars. So sell Japan means what? Lower yen, right? And they will buy US, which, is the highest interest rates, that you can get in the market. And they will buy US. So US goes up, Japan goes lower. Now, again, like I said, there is a problem on that front because yes, everybody is now aligned or has an alliance to Japan or to the yen because the yen now gives them an opportunity to make free money. But the yen is going to suffer or suffers because everything in their own country now becomes expensive. So what do? There are two things that they can do. The first thing that they are going to do is one, raise the rates, right? So there's an important chart to check, right? That chart is called JP10Y. Just the same way we look at US 10Y. This is the Japanese bonds yield, just like what I told you. So like I said, for a very long time, it's been, look at, minus, like zero, like less than nothing. That there was a time that you would borrow you would get money from the Japanese yen for less than for at zero cost actually, right? And that has started to rally up and rally up and rally up, and right now it's somewhere around 2.85%, right? So that's one thing that they're going to do. They are going to increase the rates. And if they increase the rates, what will happen, right? If they increase the rates, then the that trade-off, the carry trade doesn't look so interesting anymore. You get, I'm going to make 4.5% probably when they were selling at zero point 0.5 as our previous example. But right now, it's now 2.8% to 4%. It's no longer interesting. Right. And it starts to bring a threat that these people are getting smarter. If they continue to increase this rate, then what I initially thought I would pay back zero point 0.5, I'll probably now be paying more and maybe even lose money. That's people that have gone to, do the carry trade idea. Right. So that's the first thing that they can do. The second thing that they can do is they would sell the US dollar to buy their own currency. I'm telling you this because of something. Again, like I said, it's not the other block and Fair Valley Gap theory. It's much more deeper, but you just listening to it, you might not get everything at once, but it would add to whatever you already know and build on that. Right. So that the first thing again that they can do, remember, they have a problem because people now just take their money and then sell it. So the more they sell a currency, the more you sell a currency, the more you sell your investments, the weaker it becomes. Think about it. You have one BTC and then you take one BTC and sell zero point 0.5 BTC. You no longer have one BTC, right? Whatever you have has now dropped in value. That's the same idea. So they will sell Japan yen and they will buy the dollar. What will happen to the dollar? The dollar would rise because people are putting money into it. Right. So, but that makes that currency weak, Japan weak. Now, Japan cannot just be having their people complain. It's bad business for them that, whatever you guys are doing up there is affecting everything that we have down here. Everything is expensive. We can't even live because of this interest rate wahala. So, what are we going to do? Okay, we're going to increase the rates. The feds will decide that instead of us going into recession because of high inflation, increment of goods and services, people are not able to afford stuff, recession is coming, we would increase the rates. We would increase the rates because now we start to look more attractive on the market. People in Japan can say, oh, okay, since our interest rates is going higher, let me leave my money in Japan. Do you get it? I don't need to sell because there's not much difference between, the 2.8 to probably the 4 point or 3.75 that the US is offering. So this is 2.8, the US is offering maybe 3.75. Like, let me just leave my money, you get. And this still has the potential to go higher because it's been low for a while. So it becomes attractive. Money stays in Japan, right? And they start to ease that problem. That's the first thing they can do. The second thing that they can do is they sell the US. They sell the US dollar or the US treasuries, they sell the US bonds and do what? And buy the Japanese dollar or they buy the JPX, right? They buy the yen. Right. I remember they are the highest owners of or highest lenders to the US. So they have over 1 trillion. So you see that the US really is kind of like at their feet, even though it's just a crazy idea because it's like, we allow you, make money because you can borrow from us, but we are also the guys that determine if your place still stays because we can just sell your bonds, right? And when we sell your bonds, remember, bonds going when we sell your bonds, bonds going lower means interest rates going higher. So if we move that to the US now, if Japan starts to sell the bonds that they have from the US, what will happen to the US yields? The US yields will run higher. There's a problem there, but we will get to that. Right. So those are the two things that Japan can do to kind of ease off what is happening in their economy. And let's look at let's look at JPX. Let's look at JPX. Right. So JPX is like your JPX, or let me see, JPY basket. It's still the same thing. Okay, so your JPY basket is kind of like your US dollar. What we saw last week, right? What we saw last week is called a yen intervention. So it's just yen intervention basically, and it's like they're like, no, 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 no. The dollar, you are doing too much. We are going to invest back into our currency. Like I said, they would do what? They would either sell the dollar, right, and invest. They would sell the dollar and buy yen, and what will happen? On that front would see very huge movements like this. When they sell the dollar and they buy yen, we would see movements like this because now this is showing that, oh, investment is coming inside of the yen. You'd see, look at it, for years, what has been happening to this currency is being sold off because the carry trade thing, right? Now, we see these interventions many times when, the governments are like, no, 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 we're not going to keep suffering like this. Let's do something. Let's keep some money in our base here. Right. So we saw that yesterday. Sorry, last week. Last week, even going into yesterday, right? We saw that the yen was being invested to what will happen? What will happen to the dollar in this case? Or what will happen? Yeah, we can use USD JPY to check this. What will happen to USD JPY in this case? USD JPY would fall off. Why is USD JPY falling off? Right, because now the dollar is now being sold to acquire the yen. So I showed you the yen going higher because that's what is being bought. The dollar is being sold. If you look at USD JPY, it's known to just rally higher. Why? Because of the carry trade. From 2011 or 2010, thereabout, the yen market has just been rallying higher. And it's because of what I just told you. They just borrow money from Japan and then they use it to invest in the dollar. That's why you probably have heard about something called the 160 level psychological, or the 160 psychological level for the yen. And it's that level that, when price gets there, it kind of goes lower. And it's because this puts a strain on the economy. When we start to get into this area, the 160 yen level, it starts to put a strain on the economy of Japan, and that allows them to intervene. How do they intervene? Again, like I said, they would raise rates, or they would sell treasuries that they already own of the dollar, and then they will invest it in their currency. Right. How does this affect the market? Like I said, when they sell the treasuries that they have, remember there are two things they can do. When they sell the treasuries that they have, what will happen? When they sell US treasuries, US bonds is linked to what? US yields, right? So when they sell the US yields, what will happen to when they sell the US bonds, what will happen to the yield market? The yield market would expand higher. That's what's going to happen. The US market, the US yield is going to expand higher. Now, the US yield expanding higher has its uses and it has its pros and cons. The pros is that investors would leave their money in the US. Remember, investors are the guys that kind of hold the economy together. They're the ones, with share volume. They have the bigger share in everything, right? They would leave their money in the dollar. That's why you'd see dollar continue to rally. But the problem about this guy going higher is it is harder to buy a house now. It is harder to shop right now because the interest rate that you need to, if you want to borrow money for your business, the rates would just be crazy and keeps getting crazy. So they would, at some point, if this continues to just rally, there's going to be a recession. There's going to be a time where everybody's like, or there's going to be a time where spending just stops because we can't even do business, which is why when this continues to rally, your stock market suffers. Your stock markets are made of businesses. For those businesses to thrive, spending needs to happen. So if continuous spending happens, right, the stock market rallies. Continuous spending would happen when the economy is fluid enough to release cash, when people are able to buy houses, when rent is not expensive. And what would make that happen is this guy falls. Now, when these guys falls, right, remember, it's no longer an interesting trade for investors. So they do what? They move their money to risk assets. What are risk assets? Gold. They move their money to stocks where they can get a higher interest. So if they start to sense that, oh, this is already falling off, what are they going to do? They're going to take their money and say, okay, we're going to put it into gold right now. Gold really doesn't have a yield. It's just it's an avenue for investment when this other sure investment avenues are not looking good. Look at it, right? Look at it. Let me show you this. Think about 2022, 2023, 2024, 2025. What did we have? We had the yield market, this is 2023, going lower. The yield market going lower would allow gold, right, just rally aggressively. 2023 October, right? What happened to gold? It will just rally aggressively because why? People are not seeing the sense in leaving their money in an investment that is crumbling, which is the USU, the US bonds. So they'll take that money out and then invest it in risk assets. If you go and look at the stock markets also, they expand. So when I said in the beginning that there are markets that are very important and then shape the long-term view of how markets work, this is what I'm talking about. This is exactly what I'm digging deep to, right? Because again, you need to come into the trader's notes. You need to start to see this bigger than just patterns. And so I'm talking to you about it. You need to start thinking about it about because you are going to catch a good run. And that good run would be in line with fundamentals, would be in line with your technicals, would be in line with sentimental analysis. That big run, that good run that you're going to be able to stay on one side of the market without shifting, without moving until there's a shift. Remember that I talked about all through this year how I'm just going to hold my thought on gold sales because what? We have not seen that change in the yield market. It's still the same thing I'm still talking about till now. It's the same thing I'm still talking about till now. That we're not going to see gold will continue to rally lower or continue lower or maybe consolidate, right? As far as this market, right, continue to rally. Now, the question that was asked last week, and um, a brother of mine in the community did justice to it, is, oh, why did we then look at the US, the different year markets? Because they kind of like have if you look at it, this one says 4.68 here, and this one says 4.241. And a simple answer to that is this is what, if you're looking for, it's just by the name, it says 2-year yield. It talks about what is happening like in the here and now. And when you think about the 2-year yield, I want you to think about the Feds. Remember, the Feds have the intervention to say that, you know what, there's problem here, there's problem here. We cannot cut rates, right? Like right now, oil has been the problem that has made this continue to go higher because we already have inflation. So that problem that we are going to have when we cut rates, right? We already have it. So we can't cut rates. So if inflation continues to go higher, right, from the thing that is happening in the Middle East, right, which we can't even put, I don't even want to talk about it because to put a leg on it right now is just swampy, right? The US are claiming that there is, now no, there's now a peace deal happening. I think this afternoon, Monday afternoon, they said there's going to be something that would there's going to be where the negotiations are going to start, the Strait of Hormuz is opened, all that. And I think going into the end of the week, Friday, Tehran was talking about, or Iran was talking about how all of that is still bullshit. And you guys know the story. That has been, the back and forth there. But we know that the problems in there as what has caused the demand of oil, right? And that has been an inflation problem to the world, right? Currently where I stay, I pay about this is like a two bedroom, and we pay about almost 500,000 every single month for diesel. And this year it dawned on me because like last year it wasn't even something that I thought about a lot. But this year it's been like diesel is coming at the end of the month. And just imagine diesel is just 500K every single month, and sometimes even gets into 600K. I think the last one they brought, which was some days ago, was like 400K. And this is just diesel, right? Light, I think this month we even had like more of the light this month, right? But what am I trying to tell you? You would notice like your car, so for your car, it's become more expensive because of the oil thing, right? And if that is happening, the way the feds think is, okay, we can't actually cut rates if we already have an inflation problem. So why? Because we need these guys that have money in here. We need them to keep spending or keep their money, right? We don't need the economy to collapse. Imagine there's already an inflation problem. People are not spending a lot. Then our investors too would now leave because the rates are not good enough to stay. So the feds are not cutting rates. They let the rates be. Right. They either hold it, like we saw in the last FOMC, the rates were being held 3.75. Right. So this chart is to check the near-term things. Now, this is what when people are talking about, the US bonds, the US bonds, the US bonds yields, this is what they're really referring to because this then starts to get into the business borrowing, the mortgages, the long-term, outlook of what is happening. And as we can see for these charts, right, we can see that these things are bullish. They've been rallying and they still continue to rally. At least for now, in the here and now, right, they're rallying. Our real job as traders is to be able to define if, based on understanding, this continues to rally. Right. That's what you want to play on, right? You are making a bet on, I think this would continue to rally because yen continues to sell US treasuries. I think it's done, it's done and over. We've been rallying for a while, and maybe we'll start to see rate cuts. But from the news releases that we're getting, it's not looking likely. Now, it's not just inflation that makes the Feds act to cut rates. The other things I'm going to show you right now, it's in your calendar. It's job market, right? It's your job market, and then your inflation market is the one I just talked about. Your job market and your growth market. Your growth market is your manufacturing, right? Your services, that's your businesses that are coming in, right? If those businesses right, are reporting good news. Let me say it like that. If they're reporting good news, we would have higher than expected numbers. And that would mean that, oh, this is, everything is going good. We don't need to cut rates. People are still spending. Everything is good. Right. So that's what manufacturing prices, we're going to see that coming this week. Right. We're also going to see jobs openings. Right. What vacancies do we have? Are we having more vacancies than the market is forecasted? The market is saying, okay, we can have 7.242 million jobs vacancies, right, for the month of what was last month? July. Right. So what job vacancies do we have? We're going to see that also coming Tuesday. Tuesday, 3 p.m., very important time to be looking at the market, right? And if this comes in better than expected, it says, okay, the dollar is not really, going through anything. This is going to support the idea that the dollar continues to go higher. The yield market is already saying, oh, okay, we're still up there, you know, the Feds are not looking to cut rates. These things would support that buy side on the dollar, right? And lastly, let me just rush through that. We also have an unemployment claim. So we have more of the job numbers coming today. We have jobs, we have unemployment claim, and the big guy of them all, Friday, we have NFP. NFP tells us if the economy is really doing good, right, or is crashing down. And that's just really based on how many people are actually getting jobs or are actually getting employed, right? And we're going to see that, right? We have been seeing bad job numbers recently, and you can line that up with why the dollar might have been going lower. Now, I have spoken fundamentals, and I'm sure you're bored, right? But and if you're not bored, right, you kind of have like a real kick for this thing, and that's good, right? But as much as all of that is important, we still need to be rational. We still need to think properly and come back to the things that have actually, or the things that would actually matter if those things are true, right? Yes, those things are the drivers into what we want to then see, right? But how would they play out comes down to technical analysis. Right. My joy and my hope is that I'm able to infuse some level of understanding when it comes to everything, right? You're able to pick a piece of everything and you're able to make it whole in a sense where you can become bigger than what a trader is, what a regular trader is. You can be able to give financial advice even on a very high level because you have understanding of how the economy works. I just told you how the economy works. And if you're really interested in stuff like this, I advise that you go and do some deep readings, right? It's just been, I have a whole lot on my plate. I plan to just be, dropping something that can help these understandings weekly, but I've not been able to get to it, right? But I would urge you, right, that if you really love this thing called trading, right, it's a good study, right? And just like how you make your analysis, you need to still speculate. You need to still say, oh, okay, based on what I know, this is what I think would happen, right? Knowledge and information in this game is what gets you further. So let's go. Right. What did we see? Last week we saw this very expansive candle to downside. I took an L last week. Last week I was unprofitable. Right. And yeah, because I was wrong, right? I wanted to see price go higher, like I explained with you guys last week. I told you that, what I would, we really want to see is a little bit run, into the range, and then we start to go higher. That was my view. That was my view, and price did all of this, right? FOMC came and smashed lower. Yes, I predicted FOMC to go lower because Monday, Tuesday were already up. This was Monday. This was Monday. Tuesday also was kind of like I think Tuesday was when we formed the high of the week. Right. So it was clear that running into FOMC and staying in a premium level cost for price to go lower. Now, this low, I did not say, some of my guys were telling me on the call on Wednesday last week that they were expecting 100.6, 100.3, and all of that, to be taken out. Right. And I'm like, well, yeah, I see what you're saying, but I don't agree. And they were right, right? Especially one of my brothers inside of them, we were. man was really, when you're there, and I really understand that state a lot because I've been there. It's like everybody could be saying anything else, but it's like you don't want to say that this is what will happen, but you just lean towards it and was able to make good plays out of it, and I'm excited about that, right? So, but we've seen the dollar fall off. Now, two things we can see is the financials for the dollar or the fundamentals for the dollar is not so strong. One, right? The two is when we look at it technically, remember that we talked about this gap, this low to this high, and we've just been hanging in here. This is sometimes the problem with trusting breakers, right? Sometimes, right? If you go back here, we have this up close candle. I think you will find it much more clearer on the on the weekly time frame. We have that up close candle before that run lower, we break above it. So that's the breaker, and that's kind of like what I've been operating off of. And if you remember, we talked about that fair value gap, but the fact that we already took out sell side liquidity inside of those highs, we have multiple highs inside of here. We already started to see that run higher, and now boom, breaks. So now this brought me into some thoughts as I was doing my journaling yesterday. Look at the monthly time frame. We have this breaker, this obvious drawn liquidity. We failed to get into it. We have closed right inside of the breaker. And since we got here at the inch of that breaker, we stopped going, we stopped forming higher highs. I want to show you an example on the weekly time frame for GU. Let me see. Is it weekly time frame or daily time frame? Maybe daily time frame. Is it daily time frame or weekly time frame? Let me see. No, I can't find it. But let's go back. Let's go back so that I don't miss my train of thoughts. Maybe when we come back to G, we'll see it. But what am I saying? Right? We have the weekly fair value gap just above this high here, right? And remember, when we're here, we just look like very obvious, very obvious, very obvious. I remember I played like this in 2024, and I lost a lot of money that particular week trying to just get this done inside of this block. And ultimately, I still lost it. Right. But what are we seeing here? We're seeing an obvious draw on liquidity, but for some reasons, we're just coming down deep into discounts. Right. See, we rallied here, we rallied all the way very close to this high again, and failure swing by breaking market structure. What are the levels I want you to watch? The levels I want you to watch is if we're really back into a bearish trend, right? This is an engulfing candle. You want to watch out for this up close candle. Right, this is the up close candle very close to the failure swing. So if we're going to see continuous sell side, we want to see this level defend price lower. We have some levels to check out inside of there. We have this what would I call it? Fair value gap that's been, torn off, right? That would become an inversion fair value gap, right? But also, guys, also, right, and maybe this is where you guys help me, right? Also, we also have right this range inside of here that could really lead back into buy side. The reason why I went on, my stretch in the beginning of the call was to tell you about how important, the fundamentals are. And from what I'm seeing, the fundamentals are leading towards yield continues to stay higher. If yield continues to stay higher, the dollar would have zero choice but to chase yield, and then we could still see buy side. Now, is that happening right now, or we're still going to see a little bit of downside of the dollar before that ever happens? This move last week kind of like gives us off for a little bit of sell side on the dollar. But how big is that, right? Some of the things I'm also considering is we've opened this month, right? And we just took out the previous month's low. We are inside of a down class candle. So that could easily be a return back inside of this high. So we're at delicate levels here, and it kind of brings me to questioning of what exactly I want to be playing this week. All right. As you can see, I'm being very honest with how I'm thinking about price right now, because one of the greatest disadvantage you can do to yourself is not having a clear view of what price does or is doing, and then forcing your hands on it. Now, when you don't have a clear view, doesn't mean you don't make money. In fact, I've noticed that in the times where I am not so sure about what price wants to do, is the time I make the most money. Right. So, but I want you to be really, really aware about these levels, right? If I'm just thinking like a technical trader, I would think about buys from where we are, and as we start to get into premium, I'll close that out. I'll play it short term, which is how I'm going to play it this week. That's my view of price is I'm going to do discount to premium plays. I would not sell when it's oversold, and I would not buy when it's overbought. Right. When it's pointing all the way lower, I would look for buys, and I would take my profits, right, at what would I call them? I would take them at hanging fruits, right? I would look for plays that match what I want to see, right? And I'm going to play it short term rather than saying, oh, this is what's going to happen long term. For all we care, I know these highs are juicy, but we can really, really, really still return back to put out, to put down a low before we come back to it. Are we going to come back to these highs? For sure. Are we going to come back now that we just formed it? I don't think so. Right. I'm not sure. Let me say it like that. So that's what I'm watching for. Right. That is what I'm that's really what I'm watching for. Right. You'd see the currency market, also just expands crazily last week. Right. We had GU taking out this low, right? Look at that. Right. We had breaking market structure, come back down here, tries to rally, fix up that low, and then breaks market structure. We're back down here. So this was last week. We came down inside of that fair value gap, as it will be. I think it's a weekly fair value gap or so. And then we have this OB down here. So two thoughts I'm having, right? If we're going to be bullish for this week, what am I going to be saying? I'll be thinking about lows being taken out, right? So either we rally from this OB, I would like this one better, right? We come all the way lower down here, and then we go higher, right? That's kind of like what looks clear right now to me. That's kind of like what looks clear right now to me, right? And I don't know if I'm going to be trading GU, but this is kind of like what I still have. I would love to buy this level down here if I get it, right? And for EU, not so much on EU, not so much. I have some levels marked out, but as you can see, they're scattered, right? This will be up in here. If we can return back into it, that would be a good sign to be thinking of sales. So like I said, I'm going to play the premium to discount game because there's a lot happening under the covers that can really shift the narrative very quickly. Right. The yen intervention thing that I talked about is not something that when it happens, it starts to trickle in slowly. Like it blows up. It blows up. You saw how yen fell last week, right? Yeah, like that. So the question is, are we continuing to see that, or that was just, oh, guys, come back into check, come back below 160 and do your thing, right? So that's what we are thinking about inside of here, right? So this is going to be a very good level if we're going to be thinking of sales, right? But if we start to break this high, then all of that trend line looks pretty too undeniable to be swept out, right? I'm a believer of long-term currency sales and dollar buys, right? Because that's kind of like the play. If the yield continues to go higher, then that's kind of like what we see. But if not, if we have a change, then we're going to see this. I know I sound like a broken record talking about two sides, but it's because that's exactly what we have. And if you have a different tone to how I'm speaking about this, is one of the reasons why we have calls like this, so that you also can express. And that's why I don't do it on Sundays anymore. When I started this, I think 4 years ago, yeah, I used to do it on Sunday, right? And it's because, oh, Sunday nights we can talk about the week and then look forward. But now on Monday, because you also have gone to do your assignments, you kind of have done your weekend review. I think, except you're not a genius circle, you probably would have done a review. Probably would have gone back to check, oh, what happened prior week and what is to happen next week. If you don't do that, don't ask yourself why you're not consistent. You don't deserve. I'm sorry to say, But the only way we are aware with the kind of flow that happens in the market is when you are actually in line with it, right? Somebody asked that if the market is such a boring game, why can't I just leave it and come to it when I know it's going to play? That's the problem. It's boring because you have to have an eye on it, right? You have to have an eye on it, right? You have to be checking, you have to be looking, you have to be spotting for opportunities so that when they finally come, because when they come, the whole idea of profitability is only a small number of people will hop on the plane. Are you going to be part of that people? Right. And you would see that every time that you go through a week where you didn't do so well, right? Or even if you did well, you check back and see that, this was another opportunity I missed. It was this blank in my phone. Sorry, guys, D&D. Okay. So you go back to see that, oh, these are levels that I missed. Why did I miss this level? Why did I miss that level? Right. And you find out that, oh, probably I was not just aware. It doesn't happen like that so many times. It doesn't happen like that all the time, but many times it's like that. One thing I want you to look at about the gold market, I know I have many gold traders here, but one thing I want you to look about the gold market is we have been lost. Gold has been lost of direction. Like it's like, what are you guys doing? Like, are we having yields go higher? Are we having, the dollar go lower? Like, what is really happening? Because gold is a violent dragon. Oh, I'm watching House of Dragon now, so dragon comes out. Right. Gold is a violent asset when the dollar is collapsing. When the dollar is collapsing like this, gold doesn't play with that kind of move, right? It expands experientially, like from my own experience, right? I've seen that when dollar is going higher, gold doesn't really go lower like that. But you see when gold is when you see when dollar is going lower, it doesn't need to go. If you look at May last year to the end of the year, right? In fact, dollar was bearish from January to December, right? It was just downtrend, right? Consolidated from May to December or July to May, yeah, May to December, dollar was consolidating, trickling lower. That was when this guy was doing all of this, expanding like mad. But now that the dollar has caught a bit of a bead, it's not expanding like mad to the sell side, right? So, but right now, just look at it. Just look at gold. It's like we have series of up close candle, then met the down close candle, up close candles, met with down close candle. In fact, I was trying to do an analysis yesterday, and I'm like, oh, I moved it around, moved it around, moved it around, and I'm like, man, just accept this is a consolidation because it is. It is, right? Some of the things I don't like to take as a norm is that everything is a consolidation, everything is market manipulation, everything is bad market condition. I don't like to accept that. I don't just like to accept it because it then puts my brain in such a state where I can't really see opportunities, right? But yeah, let's actually still look at it, right? There's no crime trading consolidations. Like I've said, in every market condition, there's something to still do, right? And in consolidations, what I talked about before is the thing to do, all right? Which is we sell when it's at discount, we buy when it's at premium. What were the mistakes I made last week, right? If this was Monday, right, I came in Sunday opening because of the gap and I wanted to buy here. Boom, first trade. As it came lower here, I wanted to buy here. Two, second trade. Somewhere down here, I bought again. Boom, third trade. And what happened? Rallied. Right. I've talked about this so many times, right? The way or you won't and never would be able to predict how much manipulation is going to be done before price moves. Right. That's why aim for the one at the end of the ranges when you can. It pays you better. Right. So I, for one, was thinking, oh, maybe we don't need to take out this lows, but you're not the market makers, right? So we take out this low first. And it makes sense, like, oh yeah, that would have been, deeper discounts to this range. All right. Right. And when I was going to get into a trade would have been Wednesday. But look at what happened on Wednesday. Wednesday, we got up here. I was talking to my guys on the live. And we even started to plot the trade because we already took out buy side liquidity above these candles, right? So we're trying to plot the trade here, but we didn't get an entry. So price did all of this, but the actual entry we're waiting for still got done. Still got done. But I was already burnt out from the week, I would say, in the sense that I'm not taking any position. Right, but that was the trade, right? Takes our buy side liquidity inside of an up close candle and then falls. So, like I said, the trade, let me return back to that. The trade ideas that make sense for the week would be premiums, right? High to low premium. Where's the OB there? Where at the buy side liquidity runs, I'll buy that. Where is the low discount? Low, high, discount, right? Order block, and then we're looking for highs. Those are the trades that I think make sense right now. Those are the trades that I think make sense, like right now. Now, because of we had this run here, because of we had this buy side liquidity run, like we already ran our buy side liquidity above this candles, and then we returned the game. Right? It looks three Indian patterns to me in the sense, or you can just say run above equal highs here, and then that did not just lead into that led into a breaking market structure here. Although down here is also a bullish order block, right? But I'm trusting the sides of sell side here more than buy side. Now, I'm going to be wrong if we start to take out this high again, but seeing that we had breaking market structure, this is an up close candle, we've seen a return back inside of there, we're closing that gap. I would like to see how we react to this gap when we close through this gap, right? It's going to be a catalyst for me to expect more sell side on the tape here, right? Now, how far do we go? Maybe just this low for now, right? And that's a long stretch. That's if I'm able to start to see directional bias from here, and I'm able to get into sales that actually lead me down here, that'll be a good play. That'll be a good play. Right. But what I want you not to hold on to is don't hold on to the bias longer than you should, right? If things are changing, then switch with it. What would that mean? If we start to see higher highs being put up, that would be interesting because there is a lot more on the buy side than sell side. There's a lot more there's a lot more on buy side than sell side. What do I mean? Right. If we're seeing buy side here, right, this high, this high, this high, this high to start to look out for. Right. But for some reasons, this just looks cheeky to me, right? This just looks cheeky to me. Again, I said it last week, right? Okay, it was to the inner circle. Yeah, my run for FOMC would be sell side, but there was a way sell side play. And that was what I had in my journal also going into the end of the week, right? We were going lower, and I wanted to buy the counter trend to the actual move, right? The only smart thing that I did was leverage. So I was down 1.5% on those three trades. That was the only thing I did smartly, right? But the continuous getting into a direction that you know is not the direction you expect, but because you see this, and this is what happens. I say it to me so many times, when you're going to do counter trade, two things are going to happen. You need to reduce the expectations and you need to reduce your leverage because your expectation, as much as they will play out, would most likely be disappointed. And that's what happened. Right. So right now, I'm on the camp that we see at least to this lose. Like if I'm to say, oh, go to ahead, oh me, what are you gonna do? I'm just gonna sell. And if I even had the opportunity of leverage, I was gonna just look for something somewhere inside of here. I'm just really waiting. Maybe it comes in today. Right. I'll check New York session. Basically, I see a run above London's high. I'll look for a play there. Trust me. Right. And I'll aim for, again, I don't need all of this to make money. I need this low today. And if there's another opportunity, that low tomorrow, right? That might be it for the week, right? That might be it for the week, right? So I'm trying to this month get payouts, right? Even though I've not hit my goal is to be 250. Yeah, it's no longer 225, 250K funded, right? I'm currently 150K. But I think, we can start off something from that. And instead of delaying and delaying, I think it's just going to bring more interesting. It's just going to make it interesting. I think I've talked about it so many times here. Also, making money as a trader is one of the things that brings you interest to the game of trading, right? And when you trade prop firms, right, there's going to be a period where you put in the grind, 2, 3 months where you actually are not making money. I put in that 2 months, right? Right. July, June, July, and now we're in August. Right. I've been trading props. Right. But you don't make money from props. Like you don't really make money from props. The 3, 4 times that I've traded my live account, I've not also been so good recently. So I've not even had time to say, oh yeah, this is what I really want to pay attention to. Right. But I'm starting from this week, I want to start to trade the accounts, right? I just see what I do. Right? I think I have 10 days to get a payout on one of them. So let's see what happens in 10 days. Let's see what happens in 10 days. Let's see what I can do. And just to get some interesting, get interesting. I want to then use the profits from the payouts to buy another 100K, two of them actually, and then go all out on it. Go all out on it. Try to get one of them passed. That's the goal. And then we can now then sit down and try to do something with a quarter Emily and see what we can do. Right. So, but again, I'm just explaining my process because I think I should let you know. All right. So, guys, this is kind of like what I still think, is on the placard for me, right? That we see sell side on this. That's what I still have in placard, right? But I need you guys to talk to me before we round up today, right? I want you guys to talk to me before we round up today. What are you guys thinking about? What are you guys doing? What are you guys thinking about? What are you guys doing? It's investment time also for me. We're gonna have Flappy on the call this week. You guys are hearing it first. We're gonna have Flappy again on this week. Like I said, when it comes to investing in stock markets, especially for me, it's not something that I am looking at every single week. That's why on the channel, we are not seeing updates every single week because it's not every single week that there's something happening. I talked about, First Bank some couple of days ago, and I think the next day or so, Otedollar bought, is it $120 million? Somewhere around 120 plus $1 million to he bought first hold he bought shares in that company of that amount, and obviously you know what that means. That means investment into the assets, which would obviously cause growth, right? So but Fab is going to put more light into it, and we're trying to see if we can do something that can be much more fluid, right? When I'm taking money off, because with stocks also I can be a short-term investor. I did that with Jais. I invested in Jais somewhere around 3 naira, and that moved up to 9 naira, 200% in revenue, in profits, and I was able to pull out at least 100% from that, and then let the remaining ride. So there are still things, as much as calling out the plays are important. There's still also the you as the investor. You guys are already traders, so that makes it better. Right, you as the investor saying, okay, you know what, we did a good run here. Let it be. Right. It's like somebody asked me, like, oh, what are you going to do with SpaceX? And I'm like, I'm just trying to get good enough money and I'll buy it for 5 to 10 years. Right. People are buying SpaceX because they want to make money in 1 to 2 years. Well, in 1 to 2 years, you probably be irritated about what you have in terms of price. And I'm waiting for that irritation because it will be a sweet spot for me to buy. Because the guy himself is telling you that, Elon is telling you that in the next 3 to 5 years, he is going to be spending ridiculous amount of money. And I was watching one of his interview where he was saying this is the problem about making his business or products a public offering, because everybody now starts to bash you when they see you are spending a whole lot of money. They want to be sending couple of rockets per hour every single day, and that's going to cost a lot of money. But the upside of that would be crazy. So for the short-term investors, it won't be the best of things to do because you're going to see a whole lot of, pull out from that asset because people get concerned when companies are spending. your stock market is currently crashing because tech companies are spending a lot on the AI thing, right? And people get concerned. Like if you keep spending money like this and it doesn't work out, what then happens? Because that's what is holding the money. What's holding your earnings is that you are spending money on things that will bring you results. All right, but nobody likes uncertainty. But these guys have learned that to really make the big end of the buck is to be able to spend on uncertainties, is to be able to put money where everybody's going to be afraid to put money in. Right. So that's the kind of play I'll play with SpaceX. I'm going to have good amount of money and then leave it for years, leave it for at least 5 years, at least 5 years, 5 to 10 years. That's a good play. I was watching, I don't know if you saw that video on IG where they were interviewing some folks and they were asking them questions about maybe their wealth. And you hear somebody say, "Oh, my father invested in Tesla 30 years ago, or 20 years ago, or 10 years ago, or whatever." Right? My father invested in that, blah, blah. And that was like, that's the reason why they have stupid money, right? And it's that type of long-term hold, that type of long-term hold without thinking. Now, it's not all assets or, stocks that are like that. Some of them are short-term, some of them are, and it takes time to study these things too, right? But what I'm trying to do is compress that because Flappy is right in the space, is right with the Nigerian Stock Exchange. It works directly with them and makes these investments in large shares. So he'll be able to point us, in a very, very huge light in that direction, right? And we're gonna have that this week. We're gonna have that somewhere this week. So that's not a call you want to miss. Try and get on the call, right? Your 100K goes a long way, your 200K goes a long way, right? Especially for Nigerian stocks, like it goes a long way. It goes a long way. You forget it in there, or you top up monthly 100K, you top up on monthly 100K, right? You'll be surprised how 500K can turn into 5 million, like really, right? Think about first hold, right? 58 naira, I think right now turning into something like Zenith, right? 120, 130. Zenith was some months ago 49. UBA was some months ago 48, 44, 30 something. And those things are now trading over $100 per share, 100 naira per share, right? That's 100% increase. And there's a lot also like that, that does well. So again, it's an important way to I've said this so many times. The reason why I infused this into our learning here is that aside from, thinking of how much you want to make trading, aside from that, right, you're able to have something that runs in the background. Every time there's something that runs in the background, your trading becomes much more easier. Every time you have money in the bank, you are able to do the risk properly, right? Imagine you have, 8% to pass your account and you have an 8% trade, right? If you really do not care that, you can take another trade, you can allow that 8% to run and see it if you pass the account, right? Or you don't, and the old trade is just gone and you need to come back the next day. But sometimes the reason why you need to take some profits out or cut something short is because let me just even get 4% now. I'll get it really later. And it's not a bad idea. But the money comes to those who can risk. The money comes to those who can sit in uncomfortable positions, in certain positions, and still want the best and still aim for the best. So it's also good to, really just have that diversification in. So yeah, that's why we're having it, right? I think it's a value field thing, and we're gonna do it. We're gonna do it. So guys, again, I've said so much because I'm trying to cover it. What's time? Wow. I've used an hour, 9 minutes. But guys, talk to me. Does anybody want to say anything about price? Like anything we need to check? I know I did not go into NAS and that. I'm bearish on those pairs. I'm just waiting for an entry. But guys, what do you guys think? What do you guys think what I've said with what you've looked at? What do you think we have? What do you think we have for this week? Anybody? It's a family call. You can just unmute your mic and speak. Almost there. Nobody's saying anything, really. You guys are all good. We're all good. Are we all good? Imagine plotting a trade for 2 weeks and price is just coming there. Yeah, I'm good. Yeah, we're good. Oh, okay. That's weird. Remember I told you guys about BTC, and just following all of the ideas. BTC has done better than gold in my view. All right, well, both of them are the same thing, but I think BTC has done a little bit better in my view. You see that the trade I just showed now with NAS is the same trade here. Buy side liquidity rate into a very shorter block. Kind of extends there. I'm not in this trade. Like I said, this is my thing with BTC. I probably would see when it's somewhere around here, but I would not just trust it anymore. But I drew this one last week. I think last week Monday I showed you this. Same idea. Same idea. Very short block. Falls. So again, risk assets are going to suffer when we have the yields rallying. Let me see. Please, what do you think on synthetic? On synthetics, does the market respect institutions? Yeah, synthetic markets, right? I very that's really, really weird that somebody I thought nobody would ever ask me about that. I have just started to, well, I explore all markets because of different things. Now, I explore the volatility markets because of how it relates to the stock markets. They are inversely proportional. But what I would say, you'd see that I've done a bit of back testing on that also. So it's not just me just looking at it. I've also back tested. It's not for trade purposes, but just to see if the things that we work with actually work. And I will tell you for a truth, they work. They work. They work. And maybe that's why those synthetic guys make a ton of money. Although they can push it, they can push, whatever they are trying to do. When I'm scouting out a pair or scouting out an understanding of a pair, I don't just like to do what would I call it? I don't just like to do back testing. I also like to say, oh, okay, with what I've back tested, what will be the next move right now? I'm not trading it for anything, right? But I want to see, right? The ideas that I have, do they work? Or do they play out, right? And if they do, I'm like, not bad, not bad. And then maybe a decision comes in. But that I'm going to trade in synthetic markets, I don't know. I think I've just been swayed with it's boom and crash, blah, 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 blah. That's a good sell from that bear show. It's boom and crash, blah, 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 blah. Blah, right? And maybe that's why, but it's the market. Remember that when you just hear market, we're talking about discounts, premiums, right? The advantage you have to trading one pair is you can really know a pair. There's such a thing as having a long-term relationship. And the cons of that or the pros of that is that you really know the behavior of the peer. So, you might be taking out and some of you know your peer so much, but you're not even acting like you know it. The peer is telling you it's going to reverse, but you want to now stick with your rules. It's your peer. If you have spent time with the peer and show you a sign, why not just yield to it? That's what makes you an expert at anything. That even though you took the trade and 10 minutes ago it was looking good, because you know how this guy moves, this is not how we should move. And making a pact with yourself, making a peace with or making peace with yourself that okay, you know what, it's fine if this even still goes in the right direction and I'm not part of it. But I'm not feeling this. That gut feeling, that intuition comes from the identity that you have built with the entity, right? So that's what I think is the difference. That's why I can't trade USD for USD card because I think there are very serious pairs that requires time and I can't just trade any pair. Do you get it? Right? If I'm going to trade any pair, it needs to be a pair that I have sat down with, I've watched over time, I've done things like this. Like me, I'm looking at it. Oh, this is a final OB. They're going to take out London's low. I want to see how that plays out. I want to really see how that plays out, right? I've checked previously. Oh, we took out London's low here into an OB rally. Okay. So it looks like something. It looks like something that London's low can it's a natural phenomenon when we are trading New York sessions. We always aim for London's low as as that anchor of liquidity, just like you think about London session, Asia's high and Asia's low. Oh, it takes out Asia's low in London before London and it lands at 3 a.m. You can buy, right? It's like the same with Asia with London's low. Oh, if it takes out London's low, going into New York sessions today and it rallies and takes out a high, maybe it's not a bad pair. It's not a bad pair. Because I believe also that there is a pair that the moment you stumble on it and you start to do work on it, right, you start to see crazy amount of money, and it's going to be a pair, right? I think that's what makes any pair a pair. In fact, the way I dismiss pairs, I stay on the pair and it beats my oh Jesus. I think it was somewhere last year. I wanted to try to trade, I think USD card or USD German. Thank God I was very quick to run away. I don't even think I spent 2 weeks, maybe a couple trades, and I ran off, right? Because it wasn't going good. And I just knew that it wasn't interesting to me. Gold was interesting to me, right? The margins were interesting to me. And that was 2 years ago, right? It was just interesting to me, right? Like I would small move like this, $500. That's very not like GU, $500 on GU. I'm gonna wait the whole day, like, or EU is never a pair, please. And you guys don't come at me, but so fucking slow. But that, yeah, obviously it has the bad side, right? But I think that's how I have been playing with risk. My pair before gold has been NAS, right? Some of you might know me with NAS. 1 minute, I did wonders with that pair, right? And also it's because of the upside objective, as much as the downside can also be very hurtful. So let's not miss that, right? But I like that risk. I want to take that risk, right? So it depends on you. It depends on how you want to play the game, right? You are going to trade GU, and the moment you have the hang of it, right? Somebody can still be using a point one on gold, and you are going in 10 lots. You're going in 20, 30, 40, 50 lots. So it really doesn't matter. It matters with your level of expertise, what you have built with it, the courage and confidence that you have built that will allow you then say, oh, you know what? I can do wonders with this because I have a hand of it. Right. So never underestimate how good you can be on this game. And like I said yesterday, the way you improve as a trader is you spend time with the charts. Every idle time you have, spend time with the charts. That's what I do is this. What I do is this, and I do it in several ways, right? I do it in several ways. And I think one that I think is very helpful now, I would say this, and maybe we call this a day here, right? One that I think is very helpful is go back as far you can go back on the 1 hour time frame, right? Use 1 hour time frame, please, right? Go back as far as you can go back. Just go back as far as your trading view can allow you. And then just do something like this, right? This is a bullish order block, right? So you do this. Bullish order block. Oh, okay. We rallied, then okay, we broke market structure, so that's a mitigation block. All right. So it's a mitigation block because you can see this run here did not take out this low. And then there's another one. Pretty. This is something to back test, right? We have one run lower, maybe takes up aside, maybe doesn't take out, but it's inside of a range. And then we see another one that doesn't, is like higher lows or yeah, higher lows, and then breaking market structure. Mitigation block. Clean. Right. And then, you just go like that and just, figure out your reference points. Mine are the things I'm just showing you. Just do that. When you do that to a certain point, maybe wherever, I just stop at some point and then I go back and then I look at what was the wider picture. Because now, before I was just looking for, the points where we would see these bounces. Then I now go back to say, oh, okay, what was, happening before here? Like what was happening? Oh, maybe price was coming from, a larger breaker. That was what led into his buy side. Then you now see that all those buys made sense. The reason why they bought from those levels that you marked out made sense, right? That's one way to, really just immerse yourself with the flow of price, right? Because these things repeat. This thing that's happened here, right, happens every day on some pair, one way or the other. Right. Another way to do this is this is a more advanced one. You cut it out with your replay tool and then start to slowly play it and say, oh, 3 a.m. London session. If this was what was presented with me in London session, what would be my decision? And you make that decision, you play it, and you see what happens. Take a loss or no. Just imagine you're doing that 100 pairs 100 setups every day. It's like you're taking 100 trades every day. So rather than depending on that 1 to 2 trade, sorry, I'm spilling sauce now. So something wants to attack me. Okay. So rather than depending on your journal of 1, 2 trades daily to be the driver of how your pattern recognition work, you can now be taking 100 trades. You can really be taking 100 trades every day. Think about how good you are if you're taking 100 trades every day judiciously and you're not even losing money or making money. But you're actually just going through the experience that actually makes you a trader. That's why you can really, 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 really be good at this thing, even though you just started some months back. It just determines on, how long can you spend doing the work of uncovering, those things that seem hidden. All right, guys, this is 12:31. I'm enjoying the call, that's why I don't mind me. But let's leave it short for the guys that are coming back in. Let's leave it short for the guys that are coming back in to watch this. I appreciate you guys. You guys don't have questions for me. You don't want to tell me anything. You don't want to tell me your bias. You don't want me to make money this week. So that's okay. That's okay. I'm going to continue my series on YouTube this week. So continuing to that, that will be showing you my daily process. I will analyze the week. It's my review, just a video review I want to keep because I think it'll be useful for my child. But it's just going to be a review. It's nothing fancy. It's very raw, unedited. I think 5 to 20 people watch it. So it's not like it's anything fancy at all. Right. But I'm just dumping that there. And I would share what I want to see the next day. And I'm probably following that because it's a closer look to this. Right. So if you want to jump on that, it's Mace Theory on YouTube. And guys, have a profitable week. I'm rooting for you. I'm really, really hungry for results, and I want that to be you this week. I want that to be you this month. I want you to get to all of the heights that you've imagined and desired because it's possible. All right, guys. It's only up from here. I will see you inside of the week. Bless up, family. Bless up.